Hi, name is Ron Jaenisch, and I've done studies into people that have claimed to turn 5,000 into 50,000 in a few months, particularly one person. And I've looked at exactly what they did as much as I possibly could with the documentation I have, and how did they do it? How is it theoretically possible? I looked at what Larry did. Larry's a well-known individual, and he lives not far away from where I do. He turned 10,000 into 1 million in an account in a period of time of approximately 1 year. He was interviewed recently about this because he did this several years ago, and he said, yeah, those were exciting times, and I don't normally do that anymore because that was just a little too exciting for me. And then looked at a gentleman by the name of Alan Hall Andrews, who claimed to send out a weekly script and set of instructions that showed others how he can do it and how they can do the exact same thing. Now, fact is that Alan Andrews did this a very long time ago. First, let's get the legal stuff out of the way. This presentation covers part of our investigation into the activities of Alan Hall Andrews and our experiments into what may be possible. We encourage the study and testing of investing techniques and theoretical modeling. We encourage students of market behavior to utilize free web-based services to personally and thoroughly test out any and all investment theories with extensive longitudinal studies in real time utilizing real walk-forward studies. In other words, after you figure out how somebody did it, what you do is you get a virtual account where you don't risk a dime, and you try it in real time over a good amount of time to see what happens. Okay, so you prove it for yourself. So okay, after seeing this, please do not try it yourself right away with actual real money. And our investigation education is ongoing, and no representation is made that it is complete, and you'll see why. Okay, first of all, what we did was quite some time ago I met this gentleman here. His name is Alan Hall Andrews, when he was still alive, and he died several years back. And Alan Hall Andrews in the 1970s and the 1960s would send out a newsletter on a weekly basis on Thursdays in the mail that had an instruction set and a script that people were to read to their broker on Monday morning. And this, by reading this to their broker on Monday morning, they were supposed to be able to turn 5,000 into 50,000 in a few months. So what I did was I looked into this, and one of the things I found out was that he learned a lot of his techniques from a gentleman by the name of Roger Ward Babson, who is known for leaving $50 million to his heirs. He's the founder of Babson Business College, I believe it is, or something like that. It's a very prestigious institution in the Northeast of America. And he was actually a presidential candidate at one time. Okay, so Roger Ward Babson wrote lots and lots of books. I can tell you the summary in his books on what it tells about his technique. He says, yeah, it's all possible. The trick is to find a center line. And then my studies indicate that's not easy. So anyway, so that's, if you read all his books, especially his autobiography called Action Reaction, that's probably what you'll get out of it in terms of what the actual technique is. He did discuss his techniques and gave a lot more detail to Dr. Alan Hall Andrews. Anyway, so what I did was I amassed documentation. Let me show you what I did. And I laid them out on my dining room table after putting a tablecloth down. I put the tablecloth down because, as you know, old papers are dusty. And this whole big pile here is nearly 1,000 pages. And so what I did was I put these all out and I put them in, I organized them by year. I organized them by topic and other relevant things. And I organized them by year because a good chunk of the pages were what Andrews would send out on a weekly basis. And he would send out, and I'll show you that in a minute, he would send out a weekly newsletter, and which gave things to do, and then he would send out illustrations as to how it's done. He would elaborate on the theory and give examples and all that kind of stuff. You know, it was kind of an ongoing teaching thing. Okay, so here's an example, a closer example of some of the pages and piles and papers and stuff that we have. So we have a treasure of documents, and this was fortunately mostly typed up because some of it was actually a wedding, some of those were wedding documents, and a wedding document is simply when he took out his pen and he took out a chart, so he photocopied the chart onto this piece of paper here, and then he would write in actual ink what to do. See, now start at 1 and draw this, which is da 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 da. He would tell exactly what to do on this page here. And what we did was we took all these pages and organized them in some fashion that we thought was reasonable and useful, and then put them into manuals. And they're 3 massive manuals effectively, and we call that the Andrews Expanded Course. Okay, and we're going to limit this to just 100 published, and we kind of publish them as we go. And what the cost is, if you want to be involved in the Expanded Course project, I don't know what the cost is, and the reason I don't know what the cost is because what we do is we increase the cost every time somebody takes the course. Now, what we also give with it is a series of videos, and the reason is this, is that some people can sit there and read stuff and kind of figure it out, okay, and that's great. And then there's other people who need something more, and they perhaps want to see examples, and have them presented in a video is just more effective in a learning mode. Okay, and also what's included in the videos is the research that we've done. So you see here what Andrew's original stuff is, and then you get to see the research that we've done, and it's pointed out, it's obvious. Of course, we tell you. Let's take an example of what Andrews actually did. Okay, he would send out a newsletter, and in the newsletter it would have orders indicated for the week, and down here was exactly the script to read to your broker. But before you read that, when you got the newsletter, it simply says results from actions indicated, and it would say, well, you know, last week we shorted the May copper on this date at this price, basis the script to read to your broker now, right? And then the summary was, so the total net profits for the past 2 weeks is about $2,000. Hey, that's pretty amazing. On the assumed capital available of $5,000, this is 40% in 2 weeks, or at an unusually high rate of over 1,000% yearly, yada yada yada. So let's see what this orders indicated for the coming week looks like in here. Okay, what that looks like is right there. Orders indicated, the theory was that you pick up the phone and pretty much read this to your broker. Cover the June hogs at 26.10. Order with your broker. Good for the week. Take profit by the sale of August beef cattle at 31.20 for a week order also. Okay, so I guess you would have already been long the August beef cattle in order to sell them. Okay, and then a small rally is probable in copper this week, and the bellies also. However, covering our shorts for the present profit might mean we'd lose our position by finding it hard to go short again without constant supervision. So what he's saying here is that yeah, we could kind of buy and sell in here in the next week, but the problem is that the turn might come in such a way that you wouldn't be able to catch it fast enough with just by reading the stuff in this newsletter. Okay, there is a high probability that our short copper will drop to the 65 level, and that the August bellies by drops to the 37 are then to 33. Okay, so anyway, he's going through this, and this is the stuff you're supposed to read to your broker. I guess that when this stuff here that's a high probability of this will happen is not real solid instruction. What is real solid instruction you're giving to your broker would have been something like cover the June hogs, da 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 da, and then take profit, da 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 da, for a week order also. Those are actual orders. Okay, so in here he's doing some kind of discussion of to give you in illustration some kind of broadening of your horizons on how this is done. Okay, so this is an example of the newsletter, and the date was I think that's a 5 up there, 5/15/70. Let's take a look at what happened later in time, because what we did in this massive number of newsletters here and information, we got a lot of the weekly newsletters. We didn't get every single one, but we got a lot of them that he would send out. We were very fortunate in that we were able to get all this documentation from people who were retired traders of Andrew's techniques. Okay? As far as I know, I'm the only one that has the whole original set, which after I'm done with it pretty much, I intend to give to a wonderful educational institution that treasures it. It might be the library at MIT, where both Roger Babson and Alan Andrews attended to get their degrees. Now let's so anyway, here's another one. This looks like maybe it might be November or December 1970, and he talks about results from the previous week. Orders indicated what we closed out our long sugar position at this price, net gain something or other back at 420, da 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 da. So there was a net gain in something else of $214.50 for the week. Okay, let's see, present positions, $5,000, assumed working capital, and all this other kind of stuff. And then he goes in there, orders indicated. I guess this is the stuff you once again read to your broker. Buy and sell when prices meet turnaround lines. Now in this particular one, notice he's starting to give you instructions not only in at what value, but why. And that's fascinating. He's giving you some really good logic and trying to educate you as to why you would buy here and why you would sell there. Okay, so he did all these kind of things. So what happened was I looked through his material, this massive pile of paperwork, and I found that in the late 60s and early 70s he put out some incredible information that I don't know if anybody else has picked up on. Or maybe they picked up on it and they just don't want to tell people. Because what he did was he talked about a technique called the ORE. And the reason he called it the OR was because, well, first of all, a little history. It was the original OR technique was developed by a gentleman in the Midwest whose last name was Older. And Andrews decided to call it the OR technique, and he discussed it in his papers, and you can read it all in there, in the early months of 1974. And he went into great detail week after week about this OR technique and how it's used and all this kind of stuff. And then he finally said, look, this is how it's done. And this particular technique is so good, I'm renaming it from Older technique to OR technique, and I think it should only be used by nonprofit organizations who are caretakers for the funds they have, so that they can have trusts in order to have money in the future years, because this technique is useful for finding extremes. It's the best technique I've ever found for finding extremes, is what he said in 1974, and it should only be used by certain types of nonprofits and hospitals and stuff like that for taking care of their funds. And then he stopped writing about it. period. I have his written works after 1974 that go on for probably 10 years or more, and I never saw it mentioned again. So I was wondering about this. Wow. So anyway, so I did some research on my own, and one of the things that you do when you study this kind of stuff is that you do real-time studies. And so without any money on the line, what I did was I simply looked at a chart, and this is something called the E-mini, which is kind of like the S&P. Okay, and I looked at this chart, and then I looked at it, and I noticed that on I think I posted this on, yeah, it says I posted on August 9th. If you go to Andrew's course, the Andrew's course site page on WordPress, you'll see that this is what you'll see. And so I posted this chart, and Andrew's prediction, I guess, came true. He said, well, this is really useful for finding the end of a move and getting in at the end of the move. So we're going to talk more about that theory in a second. And okay, and so on that day here, it found this turn here, and I'm kind of looking at it, and I said, well, that's cool, but let's really see what happens in the future. And if you look at what happened in the next 3 months, for approximately 3 months, prices went up and sideways, and only after 3 months did it make a lower low intraday, and then reversed and has been going up ever since. And right now, today is March of 2012, so this is 9 months later. Okay, almost 9 months later. Okay, so what I did was I started doing some studies as to, well, what happens intraday? Okay, what happens intraday? Is this actually useful? So I looked at intraday studies, and when I say intraday, I would take, in doing the studies and analysis, I would take 60-minute charts, okay, and I would see if prices reversed at the or, and sometimes historically, and the reason I say that is because if we're, let's say the price is here, that right now the price is here, at where prices come up again. See, this might have been last night in the wee hours of the morning. This is a 24-hour chart, and so if you're looking at this and the prices have come down in the morning, earlier in the morning, when it was afternoon in Europe, and now we're up here again, and you're looking at this chart, you could say, oh, well, looking at this analysis here, there was an ORE line over here, and prices did reverse at this ORE line. Oh, okay, interesting. And then after that, you just kind of watch, as I did, as prices go down and up, and then I just, and then a few days later, oops, they come up again to another ORE line. Okay, and so, and down here it says Jaenisch reversal line. That's really an ORE line. Okay, and but the difference is these OREs are calculated using intraday data, where this Jaenisch reversal line here, which is really an ORE line, was calculated using daily data. Okay, that's the difference. And so, okay, so we got this line here, and this was an important line, and prices did go down here in reverse. And we said, wow, that's really cool and really interesting. And so did a bunch more studies. Let's see if there were some other times when we found this. But I can quickly show you. Yeah, and so this, I'm going to show you another one. This was the 18th or so. This was November. Yeah, no, this was weeks later in December. Once again, we had an ORE here and an ORE there, and it's really important how it's calculated, whether you use daily charts or weekly or whatever. Here, let's take a look at a daily chart. And on this daily chart, so we found an ORE low on this day here using daily bars, and the same thing happened here. Okay, and we found intraday's points that were high, and you'd barely see them. They were close to the high on these little bars here. Okay, They were also happened to be ORE points, interestingly enough. I said, wow, that's really cool, and that was interesting research. And this was that ORE on August 9th I mentioned, okay? And here you see prices intraday made new lows in October, and then this is, and since then have been up in this area here. We're out in March right now. We're on this chart, and prices are up here somewhere, okay? So anyway, so we found this ORE thing that Andrews wrote about. That was just really interesting. Okay, well, that's way cool. So did a little further study and really looked into the idea of how is it possible? How is it possible this guy could have, this is a simple chart for wheat that I posted when wheat went up here and reversed and stuff. And this is the exact same chart, believe it or not. Well, it's only less time. This high here represents this high here, and this high here is the same as this high here. Okay. So anyway, what I did was I did some theoretical modeling. I said, well, how could he have done it? How is it possible that somebody could have taken $5,000 and turned it into 50, which is pretty amazing. But more than that, what could he have done so that he could have instructed people on a Thursday, give them, write down written instructions on Thursday in the afternoon and take it to the print shop and have it photocopied, because that's what they did in those days in the early 70s and 60s, and then send it to them by mail, and they'd get it Monday morning and read it to the broker. How was this possible? Assuming he did it, how was it possible? And what I found was I'll show you. What he did was he would look at a chart like this one here, and he would draw certain lines and say, hey, this is a significant reversal point that's going to last for quite some time. In other words, this high here, where prices went to these lines here and reversed, is the end of a move that's going to go in a downward direction for quite some time. Okay, interesting. And so what would happen is let's say this happened on a Wednesday. Okay? So if this happened on a Wednesday and this was Thursday, remember, each bar is a day. And this happened on a Thursday. This was Thursday. And Thursday he's looking at the charts and he does his mathematical calculations with something called geometry. Because that's what he's taught in those piles of paper. Okay, so I questioned, well, with the Andrews techniques, is it actually theoretically possible to see this kind of market action? And on Thursday, this is the case here. So Wednesday prices reversed, and this is Thursday. Say, yeah, piece of cake. Because if one has this much data, one can say, okay, this is Thursday. Tomorrow, okay, well, Friday prices will do whatever they do. Oops, wait a minute. If this is Thursday, I'm sorry. This is Thursday, this would be Friday. Okay? So on Thursday, I can send out a newsletter that says, if prices are up in this area here, go ahead and sell. And he could give the exact value. Why? I'll show you why in a minute. Why and how that is possible. Okay, and that's because did he actually do that? Yep. What he did was he'd say, well, take profit at this price or buy at this price, stuff like that. And he'd say that ahead of time. So how is this possible? How could he have done it? Well, here's what he did. Here's what it is. There are three types of trading that people commonly do. What some people do is breakout mode, reversal mode, and others use what's called the pullback mode. And what Alan did was in this demonstration period, he would not use one of these three. He would use a combination of these two. Now he taught how to use a combination of reversal and breakout later on. But during this demonstration period, he would use a combination of reversal and pullback. Let me show you what that means. Typically, let's assuming there are three types of traders. Okay, and there's actually four, but the fourth type really doesn't apply here. So let's say there are three types of traders. Let's say there's a person who looks for a reversal, and let's say they're an absolutely perfect trader. Okay, and let's say they look for reversals on weekly charts, and this is a daily chart, and so the low here and the high here is the high and low on a weekly chart. That's been noted here. Okay, and so what happens is they do their thing, however they do it, and let's say they are magically a perfect trader, and they buy here and sell here and buy here and sell here and buy here and sell here and make quadrillions of dollars and own the whole planet within 2 weeks. No, just kidding. Anyway, what happens is these people are called reversal traders. Okay, they are out to find where significant market reversals are using certain technology that they have, and then do their thing. Now, sometimes they lose money on their trades. So let's say the guy figures there's going to be a reversal here. If he goes and sells, and if prices go to a certain value, like up here, he gets the heck out. And then waits until maybe prices go to another point. Maybe this up here will be his next point where he believes a reversal will take place, or however that works. That's how reversal traders often do it. Then there are people who are pullback traders. Well, what the pullback traders do is they'll say the market will make a high here, it'll go way down, and they'll look at this and say, wow, this is going in the downward direction, using some kind of indicator. And when prices pull back, in other words go up, then when they hit the 50%, 60%, or whatever it is they're using to calculate this, and by the way, I don't use 50 or 60% or those kind of things, even though there's nothing wrong with doing that, is what they then do is they go short and stuff like that. Okay, that's the theoretical way people do it. Okay, does this work? How well it works and stuff like that? I don't know. I haven't studied what they've done. But what I did was I looked at this and I said, well, if you combine Andrew's technique, and if you can use his technology that he laid out in the 60s and 70s in order to find reversals, what you can do is when you have this data up to this much data here, let's say, you can look at this data from here back and say, hey, prices did this, and with perfect 20/20 hindsight, yeah, this was a reversal because of rule A, B, C, or whatever concept. Let's say there was an or here, something like that. Okay, so you could look at that and say that that was true with perfect 20/20 hindsight. And then as prices came down here, you could say, well, there was no indicator, according to Andrews, that said this thing down here was a reversal. So, if this here is a Thursday or a Wednesday, then the next day it'd be, this is Wednesday, this is Thursday, this is Monday, Tuesday, Wednesday, and another Thursday up here. Somebody could write a newsletter if they know that this is a probable reversal area basis a certain set of criteria or rules that they have, and this is not a valid long-term reversal area. They could then easily say, well, you know, in 5 or 6 days from now, if prices go up to this area here, this would be another valid reversal area right up here. That would be smaller in time frame than this high here. okay, and lower in value, so it should just be a pullback. It shouldn't be a really strong reversal like here. Say, wow, that's pretty cool. So that's how he could have done it. So if he did that, what I did was I took a look at the special concepts and indicators and patterns, mainly the patterns, that are discussed in something called the Advanced Andrews course, which, by the way, I put together a few years ago. And I said, well, if I simply took, let's say, 5 of what I consider the most important unique concepts that I've contributed to that or have in there, something like that. And I listed them out as 1, 2, 3, 4, 5. And then I looked at this chart. This happens to be a stock chart of a company that trades 5 million a day. Trading 5 million shares a day is a very high number, and it is typically a company that would not be easily manipulated like a penny stock. Okay, this is a very famous and well-known company that trades about 5 million shares a day. So I looked at this chart of this company here alone, and this is not a super valid study of the universe of stocks, because then I would have to study thousands of stocks, and I would have to do this with thousands. But I wanted to see, is this possible, and what would be the next step in my investigation and stuff like that. So what I did was I looked at this chart, and as you can see, this study here was done after January of 2012 on this data here, because that's where this chart ends. And this is about a year, almost a year in data. And what I did was I put numbers. So I have these 5 things in the Advanced Andrews course, and I said, well, on this particular chart, is it possible that at these turning points that were sometimes the extremes or sometimes the test of the extremes, that these indicators or patterns were true? And as you can see, at this point here in time, number 1, 2, 3, 4 was true. Over here, number 2, 4, 2, 3, 4, and here number 4, 2, 3, 4, 1, 2, 4, 2, 4, etc., etc. And so what happened was I figured, well, if number 2, 3 are true, or number 2, 4 are true at some of these turning points, would I be able to know this ahead of time? Let's say I take a look at indicators 2 and 4. If they're both true at this point here in time, and this time, or 2 and 3, or 2, 3, 4, let's say, would I have been able to guess that ahead of time over here? And the answer is I would have been able to say, down here at this value, if prices go down here and don't go down past here, for example, then indicators or patterns 2, 3, 4 would be true. I looked over here, let's say, knowing this much data, say, well, over here patterns 1, 2, 3, 4 would be true. Say, wow, that's kind of interesting. So this would lead me to believe that it is possible, and perhaps even likely, that what Andrews did was he selected things that he would trade that had a situation where using the reversal was already occurred, and then a trade would occur at a pullback was his way. That would seem to make sense is what he did. And one of the interesting things that I found was that he would send out these charts with, it might have been a chart that looked like this, and this is one of the ones I posted on andrewscourse.wordpress, and it's still there, where I posted a chart like this, and then a few months later posted this one here, and the idea was that prices would reverse at these lines here. And he had this geometric technique for calculating the locations of these lines. This was kind of interesting. And by the way, this high here that went to this line here, coincidentally, was a reversal that lasted for quite some time. So I asked myself, what else did this guy do? Well, what he would do was he would look for things, why would he pick the hogs versus silver versus this and that? He would look for things that first and foremost had their major pivots at a predictable reversal point line. So let's say there was an OR indicator over here that came in, which did happen in August, okay, of 2011. And what he would then do is use the theory that prices would go up for several months, which in fact, coincidentally, at this particular chart, they did. And then, so you'd say, well, look, prices already did this, and I'm able to verify, I'm able to see that happened with 2020 hindsight. And so because I'm able to see that with 2020 hindsight, I can use my indicators, which also will find turning points in the shorter term, just using them a little differently, in order to know where to buy and where to sell, kind of like was done here. Okay, that's my theory on what he did and how this interesting man here was able to send out a newsletter that gave people the instructions on how to do it. Well, what I encourage others to do is to do the research themselves, and the way you're going to do that is by two ways. Way number one is you get yourself the course, which includes the videos and the original material that you can do the research in. Includes the videos, includes a discussion group, all those kind of things. That's one way. Again, that's limited to 100 people. And then there's way number two. And that is if you take the Advanced Andrews course, which will get you the insights on the things that I use to study this in this particular thing here, and is available at andrewscourse.com. Okay. What happens is once or twice a year we have for anybody that's taken the Andrews course, whether they took it from us 10 years ago, 2 years ago, or last week, doesn't matter. What they can do is they can come to our live events at no additional charge. And when they come to our live events, which are sometimes held inside the USA and sometimes out, in some years we do both, is they can go through our written material that we bring along. So in other words, it's real normal for me when I go to these events to lecture at them, to have conferences and discussions, to bring along these manuals here so that people who want to do the research themselves and look through the material and all that kind of stuff can do that. Okay? And they can sit there and they can take notes and on what he wrote and all those kind of things, and that's possible. Okay? So that's how we do that. Anyway, this is Ron Jaenisch over at andrewscourse.com, and I invite you to join us in the investigation into the discoveries and the writings of Dr. Alan Hall Andrews. Simply go to andrewscourse.com and it's all there. And one of the things you can immediately do that does not cost is you can join the discussion group called Precision Trader. And in that group, every once in a while, we post charts and say a few things. Okay? And that's free. And if you want to take it further, just click on here. You see what you get. And you can click the Buy Now button. And if you want to have the massive expanded course with the OR indicator and all that kind of stuff, you get to see the video, which shows you exactly what goes on. And we also offer a whole bunch of videos that come with it. These are different from the videos and the discussions in the Advanced Andrews course group. Very, very different. Okay, and in order to even participate in the massive expanded course, you really should have gone through the material, or have at your disposal anyway, the material in the Advanced Andrews course, because some of the things that are discussed in here that I discuss in terms of my research and what I did in the videos refers to techniques that Andrews never discussed because I uniquely discovered them, and they are discussed in greater detail in here. Give you an example. Andrews discussed pivots very minimally. He said, well, they're turning points, they're extremes, except in other, and you draw your lines from extremes, except in some cases where you draw them from closes and stuff like that. What I say is that's good, and here's what I think Andrews said. And then I say, well, here's a mechanical way of doing that. And here's something you can try in a very mechanical fashion so that you can do this with a computer type thing. Okay. Anyway, I thank you for your time, and come and join us. Bye.